Hello and welcome to LOSC Securities Weekly Market Roundup. I'm Tharundu Amarasekara. In news about the economy, the overall trade deficit in January has increased up to $541 million, and also the overall imports have increased by 6.2% on a year-on-year basis. This is despite the January fuel bill dropping by 19.2%.
Consumer confidence is on the rise, mainly driven by lifting of the import restrictions. This could be further boosted by reducing tariffs for utilities and fuel. However, the former central bank governor, Dr. Indrajit Kumaraswamy, has warned about Sri Lanka slipping back to the past by over-subsidizing most of these utilities.
Sri Lanka Stock Exchange CSC's most valuable listed PLC, Expolanka, has announced a delisting. They are offering 185 rupees a share for the shareholders, which is higher and with a premium compared to some of the recently trading prices. The key reason for this they are giving is that they wish to focus more on their core business and drive international growth as well. In news about the port city, China Communication and Construction Company, the largest investor in the port city of Sri Lanka, which has already invested around $1.4 billion and set to invest another $300 million more in June for phase 2, continues to show confidence about the growth of the port city and extremely bullish on its future developments. However, one needs to consider the possible threat from the upcoming growth of the Vizhinjam port in India, Kerala, which is set quite close to some of the global shipping routes which account for about 30% of the trade. From ASEAN to Europe, the focus of many parties is on building international trade ties. Ceylon Chamber of Commerce recently organized a virtual meeting to develop bilateral trade between Sri Lanka and Indonesia. Meanwhile, there is a delegation from the German Parliament which is heading to Sri Lanka next week, in which there will be talks on developing both political and trade ties as well.
Hi, this is Amrita Alahakun and this is the International Business Highlight. Artificial intelligence, or AI, is the new secret weapon used to sniff out fraud employed by the Treasury Department of the United States. Starting around late 2022, the Treasury Department began using enhanced fraud detection methods powered by AI to spot fraud. Treasury's AI-powered fraud detection recovered close to $375 million in the fiscal year 2023 alone, marking the first time the Treasury publicly acknowledged the use of AI for fraud detection. The reliance, in fact, is not on generative AI that supports popular AI tools such as ChatGPT, but one that falls under machine learning and big data.
That's it for this week of Weekly Market Roundup by LOSC Securities. And no matter what decision you make in the upcoming week, make it with the right information and the right intelligence. See you next week.